Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. A lot of things going on in the charts and we've got a lot of things to get through. So I know you've already made a cup of tea. So let's just get down to it and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please do your wider research before you make any investment decisions. Okay, we're going to start off with the daily chart and the 60-day cycles here. We've been looking at this level here, this 25,200 for many weeks now, and that was based on the previous supports and resistance along the way here. So we've been saying for many weeks that once we get above this level here, this very critical level of 25,200, then that would confirm that the bottom of the bear market at the 15,400 will be in. So we can now confirm that's the end of the bear market for those of you who wanted confirmation before getting into the Bitcoin here. So maybe this is your last chance to get into Bitcoin before the big bull run for the next 2 to 3 years. And as you can see quite clearly, once we broke this level here, we've gone on another big march over here, all the way up to the level that we've been mentioning for the last many weeks, which was the 28,000 to 32,000. And I've drawn this level here. It is a range because the bottom of the range is about 28,500 and the top of the range is around about 32,000. And when we zoom out, we can see quite clearly why that's the case. This level goes all the way back to January 2021. I think it's going to be very difficult to actually get above this level and march on to 40 to 45,000. So we can expect with a good degree of probability that we're going to get a reasonable amount of correction in this range. Whether it's going to be at 28,000 or 32,000, that's anybody's guess because there is too much resistance and support in that full range here. So you can see all the support lines and the resistance lines over here. So it can be anywhere between this range. It is a large range. Coming back to the 60-day cycle, it now looks quite clear to me that when we came down to this level here at the 19,568, that's where the cycle ended over here. So to this 51-day end of the previous cycle, and this cycle here has ended on the 70th day, which is within the range of the 10 days either side of the 60-day cycle where we can actually bottom out. So what that tells us now is that the cycle should be ending around about in 60 days time, around the middle of May, and the mid-cycle should take us all the way around about the 9th or the 10th of April, which gives us a lot of clues as to where this cycle could be heading. So as we know, once we've come out of a bear market low, we tend to make right translated cycles, and these cycles help us to know exactly where this price may go with a higher degree of probability. So if we're going to make a right translated cycle, surely we're going to be going above, making a new high at the midpoint over here. And while we can have oscillations along the way, the general trend according to these cycles would be to the upside, which tells us that we may then top out at the top of the range rather than the bottom of the range. So only time will tell, and the main thing to look out for is that, as I've shown you in the previous cycles, within the first year after the end of the bear market, we tend to make either a 61.8 or a 78.6 rally before the actual halving, which is expected to be around about April, May of 2024. As I've shown you in the past, in the first cycle, within the first cycle, we got this top and the bottom. And then before this first halving that we got, the price came all the way in between the 61 and the 78.6 level here before the halving. And then before the second halving, at the end of the first cycle over here, we had two rallies. One wasn't nearly to the 61.8, but the actual main one was just before the halving to the 78.6 level over here. And the last halving that we got was back in May 2020. And once again, before that halving happened, we had one rally all the way up to the 78.6 over here. The next halving is going to be around about April or May next year, 2024. So what we can expect, as I've shown you many times before, is that if you take it from the top here to the bottom at 15,400, in the context of the historical record that we've just seen, Bitcoin should come up to at least the 61.8, which is around $40,000 mark here, or the 78.6 level, which is the $50,000 mark here. So these are the two targets I've been giving you for the last many videos now, that before the next halving, we are expecting to go all the way up to either the 40 or the 50. And we can judge by the price action nearer the time of where the likeliest target is going to be. As we'll see with some of the other indicators I'm going to show you, it seems unlikely that the rally that we're having just now will take us all the way up to the 40 or the 50. Of course, that is entirely possible, but I would say 60-40 against that when we look at some of the other indicators. And if you want to follow the 60-day cycle, I've left a link in the Twitter page, and I'll leave that same link at the bottom of this video if you want to follow the 60-day cycles. It is a little bit dry, but well worth the knowledge that you'll be able to gain from it. And the link to the Twitter page will also be below all of my videos. If you've been watching my videos, you'll know that I've been talking about this inverse head and shoulders pattern for many weeks now, and the neckline for the inverse head and shoulders, as I've marked out many times, is here at 25,200. So what we have is the left shoulder, then we have the head, and then this was the formation of the right shoulder. And if you've been following me on Twitter, you'll know I made a comment about the actual consolidation of the right shoulders here, that the left shoulder took 63 days to form, and currently at that time we've just had about 26 days. So normally you'd get a symmetrical right shoulder, and this hasn't formed properly, so you would have expected a little bit more of a consolidation. However, the fact that we haven't taken much time to consolidate in this region here, and that a huge amount of buying came in with this big candle over here, tells us that people are not willing to wait. So this is really quite a bullish development. Some of the large buyers would have normally waited for the consolidation of this pattern over here for many weeks, just like this one over here, about 60 odd days. But the fact that they've been impatient and started to buy in big amounts over here tells us that this may have a lot more room to go to the upside. And currently what we're doing is we're going above the 50 simple moving average on the monthly chart. And as you can see, as far back as 2015, we'd never really closed below this except in June last year. So we fell below it, and the fact that we've found resistance but now managed to get above it is a very bullish sign on the monthly chart over here. And this is quite significant. The one that everybody looks at is the 200 simple moving average on the weekly chart, because of the very strong support that we found along the way in the historical context of Bitcoin here. And this was the first time we'd really made a big move to the downside over here. But you can see quite clearly we're now moving above this simple moving average. And we closed yesterday for the first time above the 200 simple moving average, which is extremely significant. Okay, I'm going to move on to the stochastic RSI, which I haven't shown for many weeks now, simply because there wasn't something significant developing on it until recently. So if we go back to the first cycle over here, the thing to look out for is this level at the 20 mark. Once we get the blue and the red lines both crossing above from a bear market low, this is normally where we find the start of the next bull market. And this has only happened very few times. So this was the first one over here. And if we move to the next time this happened, this was at the end of the 2017-18 bear market over here. So once we'd crossed back above the 20 level, that's when the fireworks took place and we went on to the next bull market run. And now for the third time this has happened one more time. Both the moving averages on the stochastic RSI showing very strong momentum and have now crossed above the 20 line over here. Of course, we've got about 11 more days to go, but certainly it's now peering above the head, and so wherever this closes, if it closes above the 20, then we're good to go to the upside over here. Another sign that we've come to the end of the bear market over here is the confirmation that currently we're now on the third month above the 8 EMA on the monthly chart here. And just like when we fell below this 8 EMA after the topping at 69,000, and I made a video in March 2022 that are we in a bear market because of this? And this was really the confirmation that we'd now gone from the bull market into a bear phase for the next 12 months here. And this now is the opposite of that. It's now confirming that we've now left the bear market behind and we're now in the bull market for the next 2 to 3 years. I want to show you some of the charts on the time frames that not many people look at, and this one is on the 3-month chart. Something very interesting and exciting taking place where everybody's actually missed this sign over here. And I've mentioned this pattern many times before, and generally when it plays out it is a massive rally to the upside, and that is the Hikake pattern. This is where you get a Marubozu candle to the downside over here, followed by an inside bar candle over here, and then you get the third candle, which is a lower high and a lower low, which gives the impression that we're going to go lower, but that is to actually catch people out. And then when we get above this level here, which was at the 25,200 level, that's when the fireworks take place. So we're now basically playing out the Hikake pattern. Obviously this is the 3-month candle, so this is going to be finishing at the end of March. So we've still got another 10-11 days to go. But certainly if it comes back below this level, then we know that it's not going to play out and we may then go sideways. But this is a very good sign to say that if we do close above the 25,200 at the end of March, this really is a very good sign that we're more than likely going to go very shortly to the top of this Marubozu candle here, which is at around about 48,000. And for those of you who are still not convinced that we've bottomed out, if you look through the history of Bitcoin, it has never made a 9-month high after a bottoming out process over here. So we've now, with this candle, this March candle, we've taken out 9 previous candles. And in my time of investing, I've never come across a candle that takes out the previous 9 months and making a 9-month high after a bottoming out process of a bear market over here. So as far as I'm concerned, this candle here is showing very strong signs that we've actually definitely bottomed out over here. One thing we do have to be aware of on the bearish side of what's happening currently over the last 10 days, that as we made a higher high on the price over here, we made a lower high on the OBV, the on-balance volume over here. And recently we made another higher high over here, but on the OBV we made another lower high over here. So what we've now got is a double bearish divergence occurring on the on-balance volume. The last time this happened, it brought the price down all the way down to this 15,400, and this was where this occurred over here. So we went from a higher high on the price to a lower high on the OBV. Then once again we made another higher high on the price and yet another lower high on the OBV, and finally one more higher high on the price and another lower high on the OBV. So this was really a triple bearish divergence, which is very, very strong, of course. And I'd never seen this on a chart before, especially on the Bitcoin chart. And look what happened afterwards. We made a big fall to the downside. Of course, the FTX scandal happened over here, so it may not have played out much more from these levels over here. So we must be aware of this, that this is what kind of thing can happen over here with a double divergence on the OBV chart over here. Okay, what I'm going to do is I'm going to give you my honest opinion about this bear market, because there is still a debate going on whether we've actually come to the end of the bear market over here with these lows at 15,400. If you've been watching my videos, you'll know that I've been talking about this brutal bear market all the way down here. And when the price came down to the 17,500 level at this point in June 2022, people were asking me my opinion of what I thought. And I honestly thought that we had bottomed out over here, but because we can never be sure, I did mention that what I'm going to be doing with my own portfolio is that I was going to go 75% in, because I thought 75% probability that the bottom is in at 17,500. However, I was willing to keep 25% of my holdings for my long-term portfolio, just in case the price fell below this level over here. So while we had a good counter rally to these levels, we did come back down because of the FTX scandal, and it brought the price down to the $15,400 mark here. And at this point, as I mentioned in those videos, that my 25% holding, I was then dollar cost averaging at these levels down here in my portfolio. And I warned at that time with many videos of mine, if you look through the titles of my videos, you'll see that there was a warning to the bears that if you're expecting the price to go lower, then you may well be disappointed, and that it would be a good idea to at least get some positions in at these levels. And there's obviously no guarantee it's not going to go down or it's going to stay where it is or go higher. There's no guarantee of that, but with a degree of probability, it was looking very likely that we had bottomed out over here. And with the breaking of this very strong neckline at the 25,200 level, it looks with all degrees of probability that the bottom is now in, and we are now in the throes of the next 2 to 3 years of a very strong bull market. So in my opinion, without a shadow of a doubt, to me anyway, and everybody has to make up their own minds, but all I can say is that in my mind, I'm totally convinced now that this price level here at 15,400 is the bottom of the previous bear market, and now we're at the beginning of the next bull market, which should finish around about the end of 2025. And finally, I want to move on to the Bitcoin miners, because quite a lot of you have actually joined over the last couple of weeks in our Bitcoin miners members portfolio that we do with a video every Wednesday. In the last week's video that we did for the Bitcoin miners, this is what I was saying about the 2 swing trades that I placed at the time. For those of you who watched last week's video, you'll know that I entered into this swing trade, which I gave details of over here and also in the video itself. And in yesterday's Twitter page, I announced that I closed my 2 swing trades today as per the following details I gave a few days ago, and these were the details there. So I got out with these profits of 37% on Marathon and 42% on Cypher. And if you're a trader, you'll know that they don't always work out as perfectly as that one. So that was a trade from last week, and that was really based on the price coming back to these levels, which are very strong support levels along here, with a view to actually running up to the next support and resistance point over here. So it was a very simple case of trying to get in at the support level and going up to the resistance point. And they don't always happen within a few days. This one certainly went up much further to $2.57, but my target was at $2 over here. So as you can see, very, very quickly it moved up to the $2 mark. And same with Marathon. I was waiting for the price to hit this support line over here, which it duly did, and with a run up to this very strong resistance over here, because as you can see, this is a very strong rejection with this doji candle on the daily chart. So I based my trade on this one, as well as this green strong trend line. It came up all the way up to this green line, which is a line that actually started at $84 in November 2021. When Marathon reached its height at $84. But certainly there was a confluence of this green trend line as well as this strong rejection by this doji candle, which was at 770. Now, if we zoom out, we can have a look at a potential further trades on here. If this is the kind of thing you're interested in with the Bitcoin miners analysis, we do a video every Wednesday where we cover special features on certain companies and look at the potential for some of the smaller companies that are there. And in the last 2 videos, I've covered 2 special companies with a very huge potential to the upside. And I also share some of the swing trades that I do. And if that's the kind of content you're interested in, there is a membership link at the bottom of all my videos over here. You can use the handheld device for this membership link here, or if you're on a desktop, you can use this button here, which is the join button below all of my videos. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe, and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.